Hello? That's better. Okay, our panel discussion is accelerating the accelerators with the topic of new strategies and approaches to rapid growth. What I'd like to do is just very quickly to introduce myself and then let the team just introduce themselves with a question I'm going to give them. My name is Declan Carroll. I'm from Ireland. The reason I'm here is I'm working with the European Investment Bank around establishing a fund for the MENA to support accelerators and accelerated companies. This will be a follow-on fund. It'll be a fund of funds and bridge the gap between seed and Series A, hopefully. And I'm working with accelerators in 6 countries: Morocco, Tunisia, Jordan, Lebanon, Egypt, and Palestine. And like Dave, I was in Gaza a couple of times recently. My background is in enterprise development. I've worked in the area for 37 years. And just like Edith earlier, I started when I was 3 as well, as you can see, although I'm aged a little bit worse than she did. So the first question I'm going to ask, and they can introduce themselves as they go along, is why they are involved in acceleration, what acceleration means for you. So we'll start with Tuba Terekli of Qotuf. Qotuf.
Thank you.
1 minute, 1.5 minutes, you know.
Okay. If the mic works. All right, here we go. Hi, and all I can say is we're here because of an accelerator. 500 startups. Dave, you're our hero. And our partners, Flat 6 Labs, are right here. Qotuf is an entrepreneurship foundation from the private sector. We believe in the involvement of private sector and private sector-led corporates to support the entrepreneurship ecosystem. We went into the accelerator as a business because we think it creates a small ecosystem that showcases what should be done in the bigger scale. It shows funding, mentoring, and first off, it gives the energy necessary to convince people to take risk. I come from Saudi Arabia. We're known not to take risk. We love hotels, Dave. We built them massively. So we are trying to become the alternative economy, which is the innovation-based economy. And that's the tough thing to prove right now, to the youth at least. And that's why we're here.
Okay. And next we have Burak of, who's the co-founder and CEO of Etohum in Istanbul.
I am from Istanbul, founder of Etohum. Etohum is an accelerator located in Istanbul. We have been founded in 2008. And like other accelerators, we select lots of startups every year. We have one batch and mentor them for 3 months, and we have a demo day like others. Why we have started in 2008, it is I was part-time lecturing in Istanbul Technical University, which my students have the same kind of syllabus. At the first of semester, they have the idea and they do a project. At the end of the semester, they pitch to a real investors. I think it was 2005 and 2007. So we spin off the project. We didn't know that time that was an acceleration, becoming an acceleration program. So last 7 years, not only we accelerated lots of startups, but we have been milestone for the Turkish ecosystem, especially the internet culture, to be created.
Okay. And Yousef Hamidaddin, who's the CEO of Oasis 500.
Yeah. I mean, the question is in terms of why are we doing this?
Mm-hmm.
I mean, I'm not the... Going to keep switching
it
chairs.
along.
I think there are 2 main reasons why Oasis 500 was created in September of 2010. Today, 5 years later, we have 115 investments, and I think there's a very interesting impact model that we've delivered, and that's really the discussion and the narrative that was introduced earlier on in September 2010. So it was basically to see, can we create an economic impact? And the element, and at the same time, not only be a philanthropist in doing so, but make money at the same time. Today, we've delivered on both. We have a major impact, and therefore, that's what keeps sustaining us to continue on this, on a continuous basis.
Okay, and Issa, Aghabi, 2454.
Yeah, so I had the investment activities at 2454, which is a government-backed media free zone in Abu Dhabi. We do two main things there. So we have a corporate venture vehicle that invests in startups, early stage businesses, anywhere between a few $100,000 to 1.5 million. We'll end the year with around just under 20 investments, 2 exits to date. So that's our VC hat. The other hat is we have a strategic partnership initiative where what we do, we identify key gaps in the ecosystem that we see in Abu Dhabi and the wider MENA region and address that through strategic partnerships. And the latest one that we launched was an Accelerator program in partnership with Flat 6 Labs to help guide and grow the industry in Abu Dhabi.
Okay, so from my perspective, I want to ask about accelerators because I'm looking at accelerators for the future, and I think the industry is maturing. I think it's at a pivot stage itself, and I think that there's going to be a huge consolidation. And the models that will come out the far end are going to be a lot different to what they are now. So in terms of everybody has unique challenges, what are the unique challenges that you have in making sure that you can support not just startups, but the next growth industries in the MENA? Start.
Challenges. So first off, the language of entrepreneurship is very different. The way the panels were conducted today in this room, probably only 3% of the population of Jeddah would understand, even if they speak English. I can speak for my colleagues who are in the similar entrepreneurship support programs. The first thing that we change is the mindset of what is an entrepreneur. Currently, an entrepreneur is a person who's a restaurateur or a tradesman. And the purpose of why we wanted the accelerators, just like you rightly said, is in the scalable businesses and those that will show great premise in terms of returns on impact and returns on investment. And this is something, it's very alien to the youth. First of all, innovation is not part of the culture. Listening is, doing as told is, taking no risk is. So A, you're trying to change culture. B, you're trying to introduce different dynamics to investors that they are not willing to even test or try. In Saudi, and I can speak for Saudi, my market, we have the key challenge of 65% of population being under the age of 35. They only listen to one language now, and that's consumerism. Whatever you want to sell, I mean, I am sure every startup, every venture capital in this room wants to go to Saudi as a market. But if I ask one multinational, what tech or coding faculty do you want to open in Saudi? What startup support ecosystem do you want to do in Saudi? They back up. They say, no, we already have this in Dubai. Oh no, we already have this in elsewhere. They go to ecosystems that are easier to tackle. We have that number one fundamental problem of convincing those that need to support the ecosystem to see Saudi as a place where they need to support. Your 6 countries, any GCC on them?
No.
No. See, I rest my case. Go ahead.
I mean, we have in Turkey some of the challenges which Tuba has mentioned. I will add on these topics. Culture is a very important issue because in Turkey, if you graduate from a great universities, good universities, and after graduation, if you start a business, it seems to be you are unemployed. I mean, most of the cultural family asks you to work in somewhere, in a holding company or a bigger bank or a telecom company, and ask you a business card which have great names on it. Culturally, entrepreneurship perceived as an unemployment for probably it's coming from a closed economy decades, which is 1970s in Turkey, but we are overcoming it. There are huge talented entrepreneurs, and mentorship is missing in Turkey. I mean, it is, we are building the ecosystem, but I could easily say that we need more mentors and which have probably experienced entrepreneurs in different subjects. Additionally, access to finance is limited. These are, I could easily say, challenges in front of us. And it won't be, I mean, overcome for a short time. There is no magical wand for it. I mean, we have to probably sustain working 5 years, 10 years, and it will come afterwards like snowball effect.
I have an opinion, basically. It might just, I think what the challenge that I am facing and I'm working a lot to try to see how we can overcome is the disconnect that this ecosystem has with the legacy of this region. I mean, I don't agree with the concept that we are intimidated by risk. I think that we are, as a legacy, risk takers, and that's really what created all the legacy families that have been, the billionaires of this region. So I think one key element that is a growing concern is the size of the disconnect that what we call the entrepreneurship ecosystem has with the region that it's working within. So we are seen by many as the not so serious group, okay, and we're not attending to that, and I think that's a loss from our side. I think the other key element is again that we're not leveraging the region again. So if I look at from now until I think 2021, probably this number has even changed with the rebuilding challenges of the multiple nations. We're looking at $3.2 trillion of construction investments. And yet we don't see anyone leveraging that amount of investment to create technology associated with it. The disconnect also is we talk about the successes in this room, the valuations in this room, about startups that come from the ecosystem. But there are a couple of startups that have been created using that term in Saudi, in the UAE. I can talk about a couple later on, but that have been valued at $100 and $120 million. Have exited, they've been acquired by others, but they're not part of our ecosystem. So I think it's important that these two elements are, from my perspective, they are the biggest challenges. Disconnect with the region as an ecosystem, and that disconnect is causing us a lot of fundamental issues, hurdles that we can't overcome. And the more that we can address them, I think the less impactful we'll see things going forward.
Issa? Well, I look at it from an infrastructure perspective, marrying government support with the private sector. And how do you do that in a way to optimize the value chain? So one way which we've done it, we've laid down the groundwork to allow for that. So from an education perspective, we work with the likes of NYU and Abu Dhabi to help get the students involved in the accelerator and in entrepreneurship at an early stage. With Flat 6 Labs, we provide the platform for anyone who wants to open up or grow and accelerate through the program to do so. And 2-4, as a government entity, we support, in incentives to help make that process easier, cheaper, and as simple as possible. So laying out the groundwork to allow the private sectors to succeed and get more involved in that space is what we're trying and how we're looking at that aspect.
Okay. The next question I'm going to pose, it relates to what is needed here within the region generally and the Gulf, to make to scale up these businesses to go for growth. I mean, as Yousef said, the ecosystem is fractured here, and the reason why accelerators are seen as being a good exemplar by the EIB, for example, is because they represent in microcosm the ecosystem as it should be in terms of finance, in terms of mentors, advice, and so on. But there has been a proliferation of accelerators, most of which are very young. I mean, I think the oldest is Oasis 500, which is 2010, late 2010, so less than 5 years. And there have been seed investments and whatever. If the European Investment Bank, and I'm sure it will, comes in with 100 million and more money is made available, because that will only be the start. So we have money, which I think is only a tool. How do we take the businesses that we have now in our accelerators and make sure that they scale to the stage where they are the growth of the future for the MENA, and that they represent the exemplars that the MENA can do it, and acceleration is going to help MENA do it?
So if I look at what Yousef mentioned, the disconnect between the ecosystems, I'll speak for what we do in Saudi. We actually deal with entrepreneurs who want to do things different. We deal with investors who want to do things different. They have broken the barriers of fear, but then they are probably 0.01% of the the main population. We do have a disconnect of need that was initially there for financial reasons 40 years ago. 40 years we got into this laid-back culture. What investors and everyone needs to see is commitment and perseverance from the mentors, from the entrepreneurs, and from the VCs. How many commitments and pledges were made to our entrepreneurs that were withdrawn within 2 days? Or just as a day, if the commitment and the bank arrives, you know, the money is never there. So when you're telling me that there will be a fund of funds to fuel more accelerators, our government has been talking about fund of funds for the past 5 years. We just recently announced an SME authority. I was called in and asked, how many accelerators can you do over the next 2 years? I said, as many as you can fund. All we need is the actual engine, and we have the youth willing enough to make it happen. But you need to give it away without any conditions other than exciting the ecosystem and choosing the fund managers. Now, fundamentally, we're missing talent. Today, if you ask me, can I find 20 accelerator directors off the bat from this room? I probably can. How many would be willing to relocate to Saudi? Probably 2. So I have to move away from the reality, which is talent. And we, as an ecosystem, within ourselves, among ourselves, we need to generate the next batch of those people that will run successful programs. So when you come and you want to choose finally one GCC country, at least Saudi will be ready with the talent, you know, that you could actually fund for doing a series of good accelerators.
Money needs a home, and you know it'll come to GCC.
All right.
Believe me.
Okay, thank you.
I'd like to add, I mean, I think to your question on scalability, what we're trying to promote on a continuous basis is what scale through what platform and what countries and what region. Now we keep talking about the Arab world as if it's one country. It's not. It's divided, different tax regimes, different legislations, different issues about how do you scale up. So there are challenges within that. But again, the discussion we found to be enriching is we've now introduced a focus on leveraging such investments for introducing individuals that can have the right level of solution creation for problems that have a multiplier effect or a replication model on a south-to-south basis. So if you go from Latin America to Sub-Saharan Africa, North Africa, Middle East, Central Asia, I spent some time in Dagestan and Uzbekistan, and if you go to India and beyond, Iran is coming up. So if you look at all of these places, you'll find that the solutions that we want funds to focus on is that, again, organically driven, addressing this part of the world, and solving issues that we need in health, education, city development, city solutions. There's so much to do, and the availability of such funds, I think, will allow us to invest and scale up. Because today, the amount of money available for seed stage is negligible when you compare it to other dedicated funds. And I'm striking equity investment. I mean, if you talk about debt, of course, the discussion might be different.
Adding very quickly, short, I mean, European investment funds of funds is a great idea, but to create new venture capitals in the region. But acceleration is, I think, another kind of line of business, because most of the VCs would not take care about accelerating the new startups or, flourishing the new entrepreneurs, because most of the VCs are looking for revenues, for kinds of A rounds, B rounds. So acceleration is very hard to create flow to these VCs. So I'm not sure about the results of the funds of funds, but definitely we need more kinds of VCs. There are two sides of the probably results of this project if European investment funds give $100 million to the region.
100 million euros.
Well, yeah, just to add on the point, yes. So there's a gap in post-accelerator companies. So the access to capital is available in the region, but it's shifting more to the Series A and the latter stages. There's a gap there. So like, take an example, the first cycle that graduated in June from Flat 6 Labs or end of May. Like they managed to raise $2.5 million collectively at 7 companies, which is great. But the amount of time and effort that it took to get to that level was very challenging. So we supported by investing in a few of them, but still that was challenging. So that's one aspect to look at, I would say. The other aspect of looking at people who do it differently, people who adapt the offering to the local ecosystem. So like what we've done, we've taken the geography, like Abu Dhabi in the UAE as a location, and based on our accelerator as an international that accepts startups from all over the world, not just the region. Most of them come from the region, but as a place to launch a product that will service the Arab world and the globe as a whole. So people who do it differently is something to consider.
Okay. I think from my perspective, what I would like to do also is to say, I've worked on both sides of the divide, the government side and I've worked on the private side. And I think that one thing that happens in organizations generally, and I've seen it through the MENA, not in everyone, but there's a tendency to lose vision as to what the business is. The focus is on developing businesses, but you're a business yourself. And sustainability is going to become a major issue for accelerators in the next few years. So I think that if you're talking about investment and growth, you have to focus on this qualified deal flow that is going to take the VCs to say, yes, we want to be standing at the door of Etohum or Oasis 500 or Flat 6 Labs. We want you to help us to do our investment, but they're just a tool. You have to make those businesses really successful. So my question, and being here just as one question, is that we're talking about the Formula One and here later. Can accelerators really become the engine of growth for enterprise in the MENA? Or really should you just be the pit stop? Or
I mean, sustainability is key. Right, and I think that if we are doing this for the purpose of philanthropy or goodwill, as soon as that comes to an end, if it's a government program, as soon as the government finds other issues that it feels need focus, or that this is not solving the problem. So so sustainability for us at Oasis has been key to measure return on investment for our shareholders. We just had a round with our shareholders. We just extended our fund basically even more. We've shown them the overall performance. We're running at 1.7 to 2.1x in certain investments and as a fund structure. So I think the overall financials have to work. They have to fundamentally work for us to be a continuum that can be looked at as an engine for the country. In Jordan, for the region, the adoption of acceleration as a growth catalyst is now a fundamental strategy. It's an accepted strategy. So it's not only are we now moving into ICT, we've introduced the creative industries, we're partnering up with the European Investment Bank and the European Space Agency. We're also looked at as a destination for growth for other countries. And we've done a couple of programs where we introduce funds to accelerate from Jordan. So I think it's key that we financially work and we are financially sound, and we're not looked at as a government program or a philanthropist CSR initiative that financially cannot sustain itself.
Sorry, Burak?
I definitely agree with Yousef. Sustainability is a key point for the long-term perspective. Otherwise, the feasibility of accelerators are not very hard. I mean, to profitable accelerators all over the world probably is a hand of numbers. So in order to create the long-term vision, the sustainability is probably will be the key point for the region as well.
I think for accelerators that, for me, the equity stake model alone is flawed. I don't see it in the future. I think that there has to be multiple revenue streams to make sure that the accelerator potential is realized. Sorry.
I see it a little bit different. Nobody today gets into an accelerator to make money because they know accelerators actually don't make financial returns. They know the money is in the end of the accelerator. So unless you have a micro venture capital or venture capital that you're going to feed this deal flow into, you really are not going to make tons of money out of an accelerator. I want to see 10x returns. I will never be happy with 2x returns, but I want to make that over a hurdle rate and over returns in my future VC. So the accelerator for me was a trial to see whether or not I will have the potential companies in which I can invest in 5 years' time. Today I know they got 65% of them got follow-on investments. So I know that even the gap investment exists in the region to a degree. And I know we're out of time, so I won't keep you. We're done? Okay, all right, thanks.
Okay, I just, to finish off, I think that we're starting a process here because we're looking at how we can make accelerators better. It's not just a matter of providing funds, it's a matter of helping them to develop the tools that will be necessary for the future. So watch this space, not just for 100 million in funding, but how accelerators can work better in the future.
And
Thank
you have it on record, he promised GCC soon. All right, thank you.